Good morning. Welcome to the Meltdown. Folks, I got to tell you, we're going to take some time today, and I'm going to try to get to a longer show. It's what Michael and I want to be on come Monday. So whether it's a 10 o'clock or maybe a 2 o'clock, we're still trying to work out my timing. But I've gotten some phone calls and I've talked to some people, and I think it's time to get some serious issues out on the table, and I talk about them. But this show is really going to be about economics and what most Americans, now it's hard for me to say most because I talk to a small fraction of people. I read a lot. I look at the fact that there are polls that are taken by different organizations that have been around. Sometimes you have to question not the authenticity, but the depth of the survey when you put it out there. I don't like surveys that only talk to 1,000 people. There's 317 million Americans, at least that's the last guesstimate. 310 was the count, as I recall, at the 2010 census, but things change rather drastically. Even in my own home, I remember I had almost 10 people in the house when the census came out. Needless to say, I don't have that many today. Folks, you're wondering what to do. What's going on in the economy? Most Americans, according to the Gallup poll yesterday, unfortunately is barely over 1,000 people, most Americans don't see things getting better. And if you take a look and you do the research, you'll find that guys like Warren Buffett and John Paulson, George Soros, are dumping stocks. They are ready to get out of the market. Now, reposturing their positions, that's certainly something to be discussed. And one of the things that I want to talk about, and it's all interesting. Buffett's bailing out on some of the big blue chips. John Paulson is just dumped J.P. Morgan Chase. He also dumped positions in Family Dollar. Well, he bought Family Dollar. I know that because that happens to be one of the stocks that I bought into. Look at Soros, and he sold nearly all of his bank stocks, including shares of J.P. Morgan, Citigroup, and Goldman Sachs. Goldman Sachs came out, and they've said, folks, there's no bubble in the finance markets. And when I look at the precious metals, Michael and I are chatting about it now, we look and we see $3 up in gold, we see silver trending up, platinum is up, palladium is up. And so you try to keep everything in a perspective to understand what's going on. Now, I am not typically a conspiracy theorist. I will tell you, however, that when Roosevelt confiscated the gold beginning on May the 1st of 1933, the dollar was in trouble. We started the Great Depression in 29. Here we are 4 years later, 3.5 years, and we're dealing with problems, and the only way to get control of it is to recall gold. We were on the gold standard. Gold backed the full faith and credit of the U.S. government. We were the largest creditor nation in the world, period. And gold was pretty much illegal to own in this country until the early 70s when Richard Nixon, quote, legalized ownership again. But the U.S. Mint didn't start producing until 1986. Now, these are a bunch of different dates. And I'm going to pull all this together so that you can get a really good understanding of economics. Frankly, we're in for a train wreck. Keith, thank you for the call. Neil, thank you for talking to me. There's so many of you that I try to address in these shows to understand that the value of numismatic coins, rare coins, out in the future. Talking to Jackie and Cindy last Saturday, you can own different dates and different types of coins. That gives you the illusion of being a collector, the motive to avoid confiscation the way the laws are written today. Ronald Reagan signed Public Law 99-185. That's the law that authorized the Treasury to start making gold coins again. The coins were deemed to be numismatic is a collectible issue because collectors were exempt from confiscation in 33. And so you've got people who have amassed great wealth looking to put a storehouse of value into something that's tangible. It doesn't matter to me whether it's a rare coin or a piece of jewelry or a car collection, extra real estate. The point is that dollar bills, currency, is worthless. And it is worthless on a worldwide basis. You try to figure out what to do. Well, I can tell you this, the market doesn't believe in staying the big guys, the three that I talk about, Paulson, Soros, and Buffett. Don't know about Bill Gates because he's pretty quiet about most things. He's buying tangible assets. He bought Leonardo da Vinci's drawings because he enjoyed reading about them, so he decided he'd buy them. He spent $30 million. No, when you're worth billions, 30 million's not a big hit, but guess what? Leo did it. Anyway, you got to be careful about what sites you look at because the information is on a delay, okay? And so what I'm going to tell you is that the dollar is weaker today, but the dollar's mixed against other currencies. Full faith and credit is a load of bunk. And when you see large groups of investors dumping stock, it goes right back to the old cliche, markets are manipulated. I love silver. I think the upside in silver is so much greater on a percentage basis than gold. Yes, central banks buy gold. They don't buy silver. And from that standpoint, I want to be able to tell people that you buy silver and you do it in a number of different ways. Keith, we were talking about it a little bit. I'll expound on it. The mint, when it started making coins, makes millions of them at a time. And the fact that they make millions of them at a time just goes to the point that when you're looking at a commodity, it's manipulated. It's expected to be. Goldman Sachs coming out and saying, "Don't worry about it," it is crazy. But Americans sometimes do things kind of crazy. So we agree that we're going to start making gold, silver, platinum coins again, and we're going to make coins that commemorate other events, and we call them commemoratives. Some are clad, some have silver, some have gold. And the U.S. Mint is in the business of fulfilling the desire and the need of its collectors. Coin dealers are interested in getting the highest grades they can for their coins, as we should. PCGS and NGC, those are the two companies that trade on the computer network. And ultimately, my concern and decisions out in the marketplace are to be in a mix of coins because that's what the laws say. But I absolutely believe, and this is that little bit of conspiracy theory, that when Ronald Reagan passed the law 99-185 to start making gold, silver, and platinum, and different laws for the other metals, silver and gold, platinum, but at the executive level, when Richard Nixon decided to let go of gold and we came off the gold standards, we abolished pretty much the Bretton Woods Accords. Full faith and credit of the U.S. government is what mattered at that point. And of course, we were still the largest creditor nation in the world. Well, now we're the largest debtor nation in the world. We buy our own debt because people don't want it. And my concern, folks, is that things are so bad that when Reagan signed the law and changed the tax codes pretty much hand in hand, TEFRA came into existence. Old coins could have been put into an IRA, an individual retirement account. They had to be flushed. And the government decided that it only wanted new material on deposit. The cheapest gold, the cheapest silver, the cheapest platinum. You could buy it in bars. You could buy junk dimes, quarters, and half dollars. there are requirements, and they fulfill CFTC rules. That's the Commodities Futures Trading Commission. So there's a guideline for all this. And there are dealers out there that are fulfilling their clients' orders, and your stuff is being put in a depository. The theory, the conspiracy is that if things got so bad that we needed to redenominate or come out with a new currency, we'd have to have something something to back it other than, quote, our word. You seize those buildings holding hundreds of billions or trillions of dollars, and they're scattered around the United States. The government could give you an IOU. God forbid it's a savings bond, because our interest rates right now are horrible. You buy gold, silver, and platinum and you put it in your safe or you put it under the mattress. Personally, I like pulling up the carpet in the closet, because thieves don't really take the time to look that far. If you've got a safe, they're going to go and either try to crack it, or you're going to be in a home invasion and someone's going to put a gun to your head or your wife's head, and you're going to open the safe. The concern over what you own and why you own it. Portability is an issue. But things are so bad in the country, in the world. Dow's down 100 points. If you're in the wrong stock, you're probably down 10 to 15%, maybe 30% in a specific stock. China is on the move, and they're buying gold. Well, they're also making gold. They've increased their gold reserves based on their own mining, and they're hoarding it. They're getting out of the US dollar. They've been dumping their position as fast as they can without crashing the dollar, because they've got an investment in it. They've gone from over 3 trillion down to somewhere just over 1 trillion. So they've cut the position by half. And this time, when we go through the next cycle, because folks, the real estate bubble was a cycle. We've recreated it. Now we're at 0% money. That's really concerning to me. It should be concerning to you as well. So it's from that standpoint that my concern is that they're going to want everything this time. And the guys that are out in the country, heck, you could be in as much of a city location within the confines of Harris County. There's no city part that I like more than the other. Although sitting in traffic this morning, trust me, I like being in Kenwood and keeping my business 6 miles away in Humble. Driving around town is a real nightmare early. But my point is that there are natural disasters. Certainly the copper mine landslide in Utah took down billions of dollars worth of equipment. Single largest event, certainly it's not volcanic. How did you say that, Michael? It's the single largest landslide in the history of North America?
Yeah, it was the single largest landslide in North American history.
Yeah, there you go. And it affects tons of copper, tons of platinum ore, and this move by the Chinese to expand their gold reserves by mining it and not selling it redenominates the Chinese to emerge as the world currency. The US dollar is losing its status. It is not the largest position. Oil is better than, quote, dollars. The Iranians don't want to deal with it. They want gold. They want real money. And so when I look at all of this and I see companies like Best Buy or Citigroup losing value, disappointing results is the best term. JCPenney announces they're going to close 33 stores and they're going to cut over 2,000 jobs. More of a problem. The debt ceiling crunch is going to be coming again soon. Goldman Sachs has got its issues. JP Morgan, they got tons of issues, and they still generated $5 billion in the quarter. So what do you do? How do you protect yourself? How do you deal with a guaranteed deflationary cycle that eventually will be hyperinflation. Folks, if you're in the top 1% and you've got tens of millions of dollars, it's going to be time to go talk to your financial planner, the guy who manages your money, and get real and start moving things around. Now, Keith, you asked me the question, so I'm going to answer it. What do you put your money into? Back in the late 90s, we talked about the 3 G's of survival: gold, groceries, and guns. Ammunition ain't a bad place if you can get your hands on it, by the way. It's going to be more valuable. That's why Homeland Security increased its, quote, arsenal to over 6 billion rounds. That was a number that we had last year. Where it's at now, I'm not sure, Michael, if you can find that one, but if you can, let's talk about it. And so you look at what the biggest guys are doing. Real estate prices have leveled off. The stock market is in the midst of what has been a huge rally. And money, folks, the traders on Wall Street, or if you're day trading and you're playing in options, you're making a ton of money out there. You're doing fine. But what do you do when you find the 40% drop again? I mean, I know people that took 5 years to survive and get back to where they were. And that's one of those stats that's out there. You're doing fine. You've made your money back. Stay in the market. It's long term. Well, we've created enough debt in the world that if you're a real conspiracy theorist, you wonder, when does the world get to a one world unit? Because that's what's on the back of your dollar bill under the pyramid: Novus Ordo Seclorum, one world order. The Trilateral Commission, the Federal Reserve isn't even part of the U.S. government, but the word sounds good. And I see the disparity between the Dow and the Nikkei as a very serious indicator. We were within, I want to say, a couple of percentage points. Well, that's spread again. Now it's wider. And when I look at Silver Eagles or Morgan Silver Dollars, folks, if you're not following in a third, and a third, you're missing part of the boat. And people who have planned their retirement around pension plans, those things are being targeted all the time. If they haven't been already cleaned out by the funds, yeah, there's laws, and I get it. You know, insurance companies have to keep a certain reserve. I get that too. They pay more interest. I get that too. I worry about all of it. And copper, which was manipulated, I want to say it's been 10 years since that guy over in London, I don't even remember, the trading desk manipulated copper as much as anything that had ever been manipulated at that time. Folks, the Dow is near a high. Gold, while not anywhere near its low, is not falling out of favor. It has not dropped $100. Yes, we're still trading in the 1240s. Yes, it's going to cost over $1,300 to get an ounce, depending on the way you want the ounce. But do not load up on the cheapest stuff. Buy different dates, different coins, 2.5s, 5s, 10s, 20s. Don't buy just circulated 20s. Buy other types of coins. Keith, I'm talking to you. Get out of Saints, unless you just want to own different gold. But the things that are going on in the world are worse today than they've ever been. We don't know how to track it because we've never been here before. A couple of weeks from now, Ben Bernanke says bye-bye. He's done running the Fed. He's probably already done, to be quite honest. He's just a figurehead. And Janet Yellen, folks, this tapering issue, when bad results come out, the jobs reports, company reports, banking system failing, billionaires dumping their stock position, China has more gold, and they're going to keep doing it. They've gone past Italy and France in ranking of what they've got in their reserves. You better understand that these are problems. We can't repay the debt that we owe Germany. France and the United States were storing gold for the Germans. The Germans want it back. Our response was, talk to us in 7 years. So did we spend it, or did we just not want to give it back? That's theory. What's in the vaults at Fort Knox? That's really theory. Last audit, 1953. Ron Paul could not get an audit of Fort Knox. But you got a stack full of those green things in your pocket, and they're good for paying debt, but they are debt. Bills, notes, and bonds. It's one of the things that my dad taught me about finance. 25, 30 years ago, you had one auction a week. Now you've got 3 to 5 auctions a week. The dollar's in trouble. People try to prop it up. People are trying to make money and all the rest of that stuff. Excuse me. So things are going to keep fluctuating. The 10-year Treasury is at 284. We were at 3 just a week or so ago. And you know why? Because people all of a sudden want to get that safe 3% over 10 years. That's disgusting returns. Gold is poised for a huge run. Silver, more. Is portability an issue? Do you have a place to bury it? You want dollars. Okay, well, that's your prerogative. I want lots of different things. And yes, I like rare because, like Keith, he's a young guy. I'm still pretty young. I'm not quite 55 yet. Dad's 84, so I know I should have 30 years. God knows I've had the opportunity to mirror and watch. I want to be smarter. I want to own the different types of things that other people are going to want. And by doing that, you own rarity. You own rarity because 20 years from now, 10, 30, 40, Michael and I have done research. We're talking over 2 generations of problems at 40 years. You can't fix an admitted $17 trillion problem because we're still adding more debt, more interest, more problems. We're adding really 2 to 5 trillion a year on top of ourselves based on the mismanagement and what we should be doing, which is building an infrastructure. That's got to happen at some point. These are astronomical numbers. And folks, you're sitting there thinking, Brett, all I got is 5 or 10, maybe 100,000. How about 1 million? Pick a number. Doesn't matter. What matters literally is what the wealthy are going to want. The wealthy, the elitists, the top of the food chain, they own collectibles. Heck, Warren Buffett probably has a stash of something he's just not telling us. Bill Gates, the Da Vinci drawings, that's just one of the things that they've got. The philanthropic side of being wealthy and managing the money properly is a serious issue. I talked about the 4 $20 gold pieces that commanded well over 100,000. When I started talking about it, I teased Michael and I went back and forth a little bit that the 1884 started with a bid of $1. Anyone would pay $1 for a $20 gold piece. My numbers were much higher, and that's just history. It's experience. Not that I want to admit that I have to put the white in my beard, because I don't. It's there naturally. Folks, this is that time where you want to own high-grade, high-dollar material. There's a lot of it out there. So owning the right material is key. Got a customer who, when we talked about a trade, was for modern gold and older Texas value. We're Texans. We love Texas. Part of the reason I like Texas half dollars is because, quote, they are rare. No, you can still go out and buy 100 of them or so, maybe 200, and you might pay too much, you might not. You may run into the people who stole so much that it's disgusting. I know some people who did. Stole it, and who bought it, and who are going to deal with it. But my point is that you own different types of coins, and you've got to don't run away from rarity. But Brett, we're survivors. We want the cheapest stuff in case we have to barter. Well, that's part of the plan. A third, and a third literally is about building a portfolio around value. You want wealth protection. You need it. You need it because the government's going to drop the ball on your head and inflation is going to rear up. Food and energy are kept out of the equation for a reason. I've seen the price of oil drop. Heck, right now we're in the $94 a barrel range. And guess what? My two gas stations up the street have a 2% spread between them over what they want to sell regular unleaded for. Use your smartphone app, go find the cheapest stuff, that's okay. You're trading worthless dollars for it, and obviously it's worth more than that. Because look at what the value of the companies that are trading in it are making. Governments are as manipulative as companies, as the traders that deal in them. And everyone's trying to cover their backside. I get it. I really do. The Fed wants to taper, but they're very cautious because, folks, if there are more bad results in the job market and Americans aren't comfortable with their job, I mentioned a good friend, works for a big company. She's very successful. They want her to move around, and guess what? She's got a concern for her job, her livelihood. She probably makes more money by living in a different region of the United States. But when you get right down to it, even when you make 6 digits in income, you have very little comfort in knowing that your job is still going to be there. I want to own cheap gold, silver, and platinum. I want to work with mid-range material. I want silver. I want coins that are collectible because it's not about a get-rich-quick scheme. I'm not trying to give you financial advice. I'm telling you, you're going to look at your portfolio. And whether or not you listen to stock commentators who say put 20% of your money in gold, why would they say something like that? Because gold is cheap. It's got minimal risk. Yes, the downside might be 20%. The stock market, I hear guesses down in the 5,000 to 7,000 range. If you've got stock, you're going to lose money. That's guaranteed. Why else would Soros, Paulson, and Warren Buffett be moving things around? They're preparing for problems. Are they buying physical metal? I don't know. They haven't called me yet, but if they did, I'd certainly be trying to get them to follow the program of a third, and a third. I want them to own rare coins. It's not today's money, folks. Are you going to live the next 10 or 20 years? Because if you are, you get a stack of material. I mean, I listen to a financial planner. Hey, get out of debt. You're losing money to the interest and to the debt that you owe. Same as the U.S. government. They just can't ever pay it. There's too many loopholes in the tax code that people try to find. But it works for the government because they make the rules. You and I, we'd be in jail already. You can't do what they do. I can't print money in the back of the store. What I can do is I give sound understanding and allow you the opportunity to make the decisions. That's what I do. You've got a pie. It's your net worth. I don't like 401ks. Brett, I don't. Why not? Because it's not your money. A 401k is labeled as your retirement, but folks, you go into your HR department and you tell them you want the money in your 401k, you're going to pay 30 to 40% upfront penalties for going and doing it. You're going to pay the taxes. And the company, they're not going to be happy. They're going to tell you that you can't do it. You're still employed. Well, those are the rules. You can borrow against it. That's not a good idea, even with favorable interest rates. So, folks, today, right now, what do? This is what you do. You follow the pattern of what makes the most sense and you buy tangible assets. I like rare coins, gold and silver. The market likes it. Heck, anyone who would spend $100 million on a painting, maybe you get to see it and maybe you don't. My point is that you own different things and you own them literally because they're smart, they're safe, and you want to own things that are liquid. Cheap gold, silver, and platinum is liquid. I don't care if you're here in the U.S. or you travel abroad, you can take something with you and you can get the local currency. You own semi-numismatic coins because they trade. There's an active market for them. You don't want to pay the premiums, that's your prerogative. Rare works whether it's cars or land or gold or silver or anything. You want the property next to the freeway, you're going to pay a premium than you are for the one that's maybe a half a mile in. You buy rarity because it's in demand. The cycle, that's easy. The guys on the telephone that are trying to give you the get-rich-quick scheme, too good to be true, probably are. But if they're limited to a market exposure, then you want to be in it. You want to play that game. You want to understand that's what this is about. Now, there's lots of coins at the grading service. I can personally state my little bitty position's about 700 coins, might be off by 10 or 20, but that's okay. Build portfolios, own things other people want. You want to maintain liquidity, then do it in a third, and a third. Some people go 50, 40, and 10. 50, half of it in the cheapest stuff, 40% in the mid-range, 10% in rare. The younger you are, the bigger that position can be because you're still making money. It's not hypocrisy, it's just good, sound information. I pray about the things that I want to do and that I talk about. And I watch what the Federal Reserve and the other central banks are doing, and they're buying gold. And then every once in a while you find somebody who dumps it. 25 years ago, 22 years ago, it was a glut on the market because the dot-com bubble was going. They were filling it up. And then it burst, and gold took off. Real estate's going to take off. Maybe. Warren Buffett doesn't think so. There are other investors who do great with it, and there are other guys that are flipping houses. And I've got an array of professionals that I deal with on a constant and regular basis, period. Anyway, if you've got questions and you want to talk about it, you can email me, Brett, B-R-E-T-T, at thegoldexchange.net. You can always visit themeltdown.com. There are 500 plus shows, 380 hours of audio. The commercials are taken out. Go through the shows from as many as 3 years ago, 2010. Okay?
Not that far back.
So you can take some notes, and shows have lasted. Most recently, I've done shows that are about 15 minutes. Go back in time, you're going to look at 40, 45 minutes. The message stays the same because it's the same problems out there. The government isn't doing anything but creating more havoc, and so is the rest of the world. They're all in debt. They're all using paper. There's wire transfers for trillions of dollars every day. And banks are trying to figure out how to keep as much of the cash. It's your cash. No, it's not. Look on the screen. It's digital. You don't own anything. You got some money in your pocket. Maybe you were smart enough and you got some gold or rare coins and you put them away. If you put them in the banks, it's the wrong place, folks. Banks close at 5 o'clock in the afternoon. If you've got a problem at midnight, how are you going to go get the cash? By the way, cash is illegal. But the stuff that you put in your safety deposit box at the bank, you can't touch it at 10 o'clock at night. Oh, there's a problem at 2 a.m. You need the money. SOL, you can't get it. And that's what this is about. It's about surviving against government. Call the store 281-548-2646. Hit option 0. Now, normally I'm not around on Saturdays. So if you want to come by, all you've got to do is give me a call. We do it by appointment only. Too many people are still trying to be out there chasing the stock market. And frankly, I'm not going to sit in the store waiting for you guys if you're not going to show up. It's not rude. I did come in. I did spend a couple hours with Cindy and Jackie, and I love it. Great conversation, good fellowship. I like it. I needed it. And now I've got a friend that I get to joke about with different topics. $94 a barrel oil. You want to go find the 100 companies that are the best to go work for? Google tops the list still. The fifth time it's number one. How many people do you think go stand in the lines trying to get into their offices when there's a quote employment call? There's a big sell-off today in Best Buy. Their stock is down 30 percentage points. Hope you didn't have a lot of money there. That's why you buy gold and silver. If it's got some downside, gold has never been worthless. Silver has never been worthless. But when you look at the upside, 50% in gold, 250% in silver, you've got a 5 times better play in silver than you do in gold. Not to mention silver is still an industrial metal where gold is a monetary commodity. Anyway, the Meltdown.com has links to other sites, more information. I'll consult with you. I'll help you build the portfolio. We'll talk about liquidity. We'll talk about the 10, 20, 30-year plan. Goals and objectives, how all that comes across is really important. Anyway, I'm going to get off talking on this podcast. I may come back later this afternoon. I probably won't. We'll just see what happens later in the day. Could be a short version. But folks, if you've got questions, 281-548-COIN, hit option 0, get a live voice. Email me, brett@thegoldexchange.net. There's always a way to find me. I always want to be able to talk to folks. I never want to get off a podcast without thanking Texas Children's Hospital, both the Downs Clinic, the Myers Center, and the Ronald McDonald House. In Texas Children's, on the 4th floor, there's 20 rooms, 40 to 60 people. If you can provide a hot meal, please coordinate it with Nancy Allen and her staff. That's 832-824-8600, 832-824-8600. The Myers Center is moved off of Stadium Drive. That's probably 5 minutes south of Fannin, where the main campus is. Disabilities from spina bifida to Downs to autism. Dr. Ostermeyer is a fabulous person and the organization is great. I love those people. If you click on the donation banners at themeltdown.com, the information is anonymous. The amount of money you give, that's anonymous. Just please mention that you found them through the Meltdown or the Gold Exchange. I'd appreciate it. They would appreciate it. I love the doctors, the nurses, the staff, and the volunteers at Texas Children's, around the medical center, and always around the world. Taking care of our babies really does matter. Folks, I appreciate you listening in. I hope you'll reach out if you've got questions, whether it's about my company, product knowledge, information, pricing. Reach out. We'll be back again no later than tomorrow. Michael will be off, but I'm going to beg him to see if he can upload the show. Just depends. Probably not. We'll be back live on Monday. Have a great day. God bless you. We'll talk to you soon. Bye-bye.